My name is James Gillingham. I am the CEO and co-founder of the company called Finxflo.
Hello, and welcome to REIMAGINE 2021. This is our 9th conference in a monthly series of events, bringing you nothing but the best projects, bright minds, and leaders in the space. We have a very special theme and topic for this month. We've done What DeFi is DeFi. We've done Tales from the Crypto during Halloween. We've done Happy Hodl Days, and NFTs just passed, which was a great experience to kind of educate everybody that's watching during our conference. So this month is a Game of Chains, Battle for the Throne, which is very interesting. Basically, we're reaching out to a lot of our partners and industry leaders to really discuss the pros and cons of certain chains over others, integrations, and the advantages of doing that. So we've been fortunate enough to invite many talented individuals and teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today, Adam, from the MouseBelt team, where we focus on early stage investments through our accelerator or providing development support to a number of growing projects, as well as education within our MouseBelt University program. Our main objective and goals are simple: increase adoption, use cases, and real-world applications. So we seek to educate our audience as much as we can on blockchain by helping them understand crypto's real impact. So I've been doing a lot of talking already. I have a special guest, first time appearing during the REIMAGINE conference, James Gillingham, co-founder and CEO of Finxflo. How you doing, James? Pleasure to have you. Thank you for joining us.
Likewise. Thank you very much for the invitation.
Yeah, exactly. So we've been doing this, for about a year now. Time has flown by. COVID is, I maybe passed us by now. But a lot has happened in the crypto blockchain space. Never stops, 24/7, 365. Your company here knows all about that. But first we dive into that, a lot of our participants, speakers have a super cool Bitcoin story or the way their journey, how they got into Bitcoin, blockchain, crypto, and fell down that rabbit hole. So we'd love to kind of since you haven't been on before, we'd love to hear how you ended up in this space and what led you, into blockchain.
Yeah, sure. So, well, I guess initially when I first left school, I left school very young. I left at 16 years old, just turning 16, because I signed professional contracts to play professional soccer or football, depending on where you're located around the world. 2 years later, I was injured. I couldn't necessarily play anymore, so I moved on to become a trader. So while I was a junior trader, and then worked my way up. After a few years of working in the investment banking world, I then moved over to a fund of hedge funds as part of a team managing $4 billion. After being there for about 6 months to a year, I kind of didn't really enjoy working there. I had a boss that was just not very sharp, and I was just like, this isn't for me. So I reached out to a buddy of mine, and we started developing algos. So because I was an FX trader, we started trading FX and developing the algos, and ended up leaving the company where I was helping manage the $4 billion. And then moved straight into the algorithmic trading company. So we were developing algos. We took $50,000 to $1 million very, very quickly within the traditional world. Now, the reason why this is important is because one of my employees at that time joined the company, and he said, "Hey, James, have you heard of this thing called Bitcoin?" I was like, "No, what is that?" Right?
What year is this?
2013.
Oh, wow. Yeah. Early.
It was early, right? Like really early. And he was like, "Yeah, do you know what this is?" And I was like, "No, I've heard nothing about it." He's like, "Oh, well, all my buddies are in it and I've put some money in. Do you want to come in with us?" I said, "All right, okay." Well, at the time, I think pounds, because I'm British, right? So the pounds to the dollar was like 1.8 or 2 to 1. So I put 10,000 pounds in, 20,000. So I ended up with about 400 Bitcoin. Right. So at that stage, it was nice. But I mean, I was, to be honest with you, I was an absolute skeptic. Right? I turned around and said, "What a load of rubbish." it's not going to work out. But I've got some spare cash. My buddies are going into it, so why not? Then a year and a half, 2 years later, obviously the Mt. Gox, the MT Gox issue happened, right? And that was my BTC gone, stolen into the abyss. So then I was the kind of guy that was like up until 2017, Bitcoin's a scam, it's a fraud, people are stealing, it's nefarious activity. So I've done that whole cycle of believing, like not believing in it, then having it stolen, then thinking that it's an absolute scam, to getting back into it, and then realizing actually no, all of my opinions about it was totally incorrect and actually wrong. And then since 2017, I started trading multiple accounts, trying to get in and out of Bitcoin, Ethereum. I was actively trading the majors, and that's what really fed me into building and developing Finxflo, because I wanted to be able to get global best price, so pricing. I wanted more liquidity, and I wanted accessibility, and I wanted to be secure and safe, right? Because obviously, since the Mt. Gox, the MT Gox issue, I'm extremely secure, or thinking about cold storage, warm storage, hot storage. What does all this stuff mean, right? So that's what happened. And then back in 2018, 2019, I thought about some I was thinking about how I could develop something like an aggregator, because I'd done some feasibility studies. So I was looking around and seeing, why is nobody else doing this, right? So coming from the traditional world of being a traditional trader, trading Forex, derivatives and stuff, there's always aggregated liquidity pools, right? Because you want deeper pools of liquidity, more people to trade with, you get better execution, you get better pricing, right? That's it. But there was no one else. Basically, when I thought about this, everybody was fighting over becoming the next exchange, right? So there was exchanges popping up, exchange. And I was like, why are they all looking over there when they should be looking here? Like, I couldn't quite understand. So I reached out to my fellow co-founder, Thomas Plaskasinski, sat down with him and said, because he's tech, right? I'm business. I have zero coding skills at all, like zero. I can't read a line of code. But I sat down with Thomas and was like, hey, can we work together? And are you able to build this thing? And he's very French. He was like, yeah, it's very simple, right? Being extremely Parisian, right? So he's always blasé about it. He said, yeah, simple. We can do that. So we went about middle of 2019. We set about creating and developing the company, which we now have today.
So what kind of, a lot to unpack there, and we'll get into all of it. Well, first of all, let's try and clarify that Mt. Gox thing, right? We probably have some skeptics still about Bitcoin being fraud or unsecure. What are your thoughts now, knowing that it really wasn't Bitcoin, it was, the infrastructure that was used? When, right now people probably think, or maybe not anymore, but still, let's just assume, Bitcoin is hackable. Like, I don't want to lose it, blah, blah, blah. It got hacked, it got stolen. But can you just explain kind of what, not in great detail, but just what happened, that it had really nothing to do with Bitcoin other than, Mt. Gox's infra?
Yeah, so basically back then I knew nothing about nothing, and neither did my buddies, right? Like we were all new to this thing, that we were just like, what are private keys? Like what is a private key? I have no idea, right? What is hot storage? What's cold storage? So basically with MT Gox, we stored our private keys on the actual exchange itself, right? So it's like leaving your wallet sat in a bar and opening up your wallet to this guy you've just met and going, do you want to reach in and take like $100 off me, right? Of course they're going to just reach in and that's it. They would take it. So the infrastructure issues, which actually came off the back of that, right? So off the back of Mt. Gox and the issues that happened there, now we have warm storage, cold storage, extremely cold storage. There's all these other ways of securing your crypto in a safe way. Obviously, the more cold that you get into what I class as like ice cold, then obviously your keys are super secure. But then you have to make sure that you're able to access them, right? So it depends on your liquidity levels. If it's, for some people like me, a long-term hold, so I just stick them in ultra cold storage and forget about it, right? But then like like leaving your funds in centralized exchanges as well can sometimes be a risk, because as we know, centralized exchanges generally go down sometimes. Even during the last fall, when we were at like 50,000, we went down to 30. I think that most of the major exchanges stopped pricing, right? And you couldn't actually get in and out of your account, right? You can't get in and out. So that means that your assets are tied up. So that's also something at Finxflo that we've totally counteracted to ensure that even if the underlying exchanges or protocols or whatever it goes down, then custody with Finxflo is still safe and secure. But I'm sure we'll come on to that later. But yeah, the private key issue is just ensure that if you're looking to go into crypto, never ever give anybody your private key, and make sure that you have all the seed phrases and all the passes, and make sure that you don't put it on paper, because I've also had buddies of mine that have written down seed phrases on paper, and after 6 months the paper or the ink has dried out, and you can no longer look at your seed phrase, right? So make sure you get yourself a nice metal some seed phrase. You can buy them for like $5 or $10 on Amazon, and you can put your seed phrase there. But and also just make sure that your private keys are safe and secure and left in some kind of secure custodial vault somewhere to make sure that only you have access.
Yeah, I mean, we just we actually had to perform like an emergency urgent seed phrase recovery a few weeks ago, successful, which was great. But I don't know how that ended up happening. Somebody had called us to help them like save their assets. So it's important, everybody watching, right, to make sure that you manage your keys appropriately, securely, and make sure you don't forget or where you put them. So let's go into DeFi, which will lead us into Finxflo. And some of the obstacles and some of the biggest obstacles in DeFi you guys have tackled, and you've just touched on some of it in right now. But I'd love to figure out kind of your experience on the DeFi side, and then let's talk about the solutions that you guys are providing. That way, coming from your background, we do have people that are I come from banking as well. I came across Bitcoin in 2012, 2013, and I sent a wire for Bitcoin for one of my clients. And I was like, what are you buying? It's 100,000 though. I was like, wow, I forget what the price was at that point, a few $100 or something. And, hopefully he held, at least had some diamond hands. But aside from that, yeah, let's talk about some of the obstacles. People are tuning into DeFi. They hear decentralized finance, open finance, peer-to-peer. And you just talked about a lot of the hurdles that DeFi has, and you're overcoming them, over the last, couple years, and probably especially over the last, 12 to 18 months has been a great, open finance DeFi boom. So what are some of the challenges that you experienced? And then let's handle those, and let's figure out what Finxflo is providing to tackle that for a UI UX, which is a big problem, to make it better for more adoption and more people to use.
So number one, if you're new to crypto, you want it to be simple, right? Like just really simple, plug and play, right? Most DeFi protocols, unless you've kind of read up a little bit or you watch a YouTube video, some of them are quite hard to really understand. How am I actually going to be able to swap my assets? Number one, right? So like what you mentioned, the UI UX part of it is quite important. That's something that we really solve with keeping our UI super user intuitive, really simple, easy. It's something that we actually set out to make sure that we have mass adoption. Now in decentralized finance, there's so many great, amazing things and so many things that are not so great, right? And we're trying to solve the things that are not so great and still keep the very essence of decentralized finance. So with regards to like front running, for instance, so right now, if you're executing a trade on Uniswap, and then all of a sudden somebody like an algo will or a bot will pay a little bit higher gas fee than you, and then basically you will be filled at a worse price, and then they will sell just above you. So they will buy, sell, and basically sandwich you, right? And what they're doing is that they're draining ETH. And these algos, these bots are going all day, every day. And from friends and buddies of mine that are very big in the market, like numbers from these bots, they're making millions and millions of of dollars every single week. So if you want to make sure that you're safe and secure around that, you need to work out a plan of, okay, how am I going to counteract these kind of bots to get them to stop like taking funds from me, right? So what we developed at Finxflo is a model which is in the traditional world, which is basically best execution. But what we've basically also executed is when we go into a decentralized environment, when these bots like try to front run, they may be able to get in front of us, but they can't get out before us. So we will actually get out the position and unwind it before that they've even executed. Or what also can happen is within our system, we automatically monitor the amount of gas. So if we so if, for instance, we're paying a $50 gas fee, right, then we will automatically add on top of the gas fee post like drawing the execution, so you can increase the gas. So we increase the gas so that we jump above them. So we're constantly so we're always getting the best price, because something that we're really working towards is global best price for all execution, right? We don't want any of this kind of nefarious activity. Obviously, within the traditional world, front running, right? If you ever front run anyone, the regulator's going to come and arrest you, and you're going to be put in jail very, very quickly. But in a decentralized finance, who is it? Nobody knows, right? Because you're just plugging in with your wallet and off you go. The features of decentralized finance are things that I really, really love, especially like the lending and borrowing as well. So being able to borrow assets and lend assets, so without actually selling your underlying. So let's assume you've got a bunch of Bitcoin, but you want to be holding another kind of token. You can actually lend and borrow, and it's a real interesting way, because after working in banks for many years, I kind of got sick of the banking system, right? Like the little guy always gets shat on all the time. And I just want to make sure that we can interrupt and we can take the power away from these guys, where we can empower the people, right? Everybody deserves to have a right of really a level playing field. Whereas in the traditional banking world or banking finance world, there is no level playing field. It's the big bankers and the rest of the people, right? So by evolving the decentralized finance, essentially you can become a mini bank, right? Yourself, you can sit there, become a mini bank. You can loan, you can lend, you're able to borrow. So that is one part of the decentralized finance, and then obviously there are other decentralized finance that is really solving real world problems and real world issues, which is also super intriguing for me and I guess the company as well.
And what do you think in terms of where are we in terms of you're coming from the traditional side, and then the decentralized side, and you're working on a solution to provide latency and reliability and speed. Like, do you think at some point it will match a centralized system of matchmaking, order books, and like, will it be as quick as it is as people are used to, or is that going to be like, is that going to be a deterrent, or is DeFi more in terms of self-custody control, like as opposed to maybe as fast as a centralized system? Because a lot of people think like, well, why not just stick to traditional finance if you're looking for best execution and and this, that, and the other. But what you're saying is DeFi gives you, or at least your platform here, Finxflo, gives you an opportunity to have a plan, even the playing field out.
Yeah, so something very interesting that you mentioned there is essentially the order book, right? So what we do is we aggregate centralized and decentralized exchanges. So by us aggregating, it's essentially like a league table, and the best price, the order will get routed into it, right? So it doesn't really, for us, it doesn't matter if it's a decentralized or a centralized exchange, or a market maker, or an RFQ or a bank, because we're also aggregating the more traditional institutions as well, right? So we have so our liquidity is very, very vast. But when it comes down to best execution and enable to lower latency, it's actually a major challenge in crypto today, because in the more traditional world of finance, like for instance, if you're executing for FX, for instance, you have LD4, NY4, the Equinox data centers, right, which is where everybody houses their execution servers, and their execution centers are all based in there. So you're able to reduce the latency. The biggest issue for crypto today, even with the centralized exchanges, essentially that many people are using AWS, right? So it's the AWS cloud infrastructure. So nobody has any real rack space anymore, right? The actual larger market makers kind of do have rack space in the more like traditional LD4 in Slough in London, and MY4, etc., and JY3. But that's actually more of a, I think that's an evolution that crypto will take. And as we kind of communicate more, because right now most of the exchanges and decentralized exchanges are silo markets, right? Because they all look at each other as though competition, right? And they're like, no, we want to be the biggest, the baddest, and the best, right? But it doesn't actually work like that. So in the traditional world of finance, JP Morgan speaks to Goldman Sachs, and Goldman Sachs speaks to Barclays, and Barclays speak to HSBC, right? They all communicate because the pie is more than big enough to make sure that everybody can eat, and everyone has a very good business. But in crypto, we're still very much like the decentralized and centralized play yet. Like people have their own infrastructure, but there hasn't yet been that collaboration, which I'm really hoping does happen within the next like 6 months to a year. Is that there's a collaboration between the decentralized and centralized plays, where the server infrastructures are all in one location, or there's co-locations, or there's obviously multiple locations, and then latency will no longer really be an issue. Because if you're trying to aggregate somebody that's based in Japan, or you're aggregating someone that's based in Australia or the US or Canada or wherever, like the latency is obviously going to be different depending on ping speed, and it gets really technical. Now, if you look at traditional finance, they try shaving off like 5 milliseconds or 1 millisecond, right? Just to get the order in quicker. Crypto is not yet evolved there. It will get there, and at some point I'm really hoping that this collaboration can really happen between decentralized, centralized, and when that happens, we'll be able to look at those like metrics a lot more closer. However, right now it's more about gas fees and just ensuring that you're safe and secure with because miners naturally go to whoever's going to give them the biggest fee, right? Of course, that's what you're going to go for. You're there for the network. So yeah, that's the
and how do you see, like, there's tons of exchanges, right? It's interesting, DEXs and centralized exchanges. Like, is that good, bad? Should it consolidate? Based off of what you said, like, I guess it may not even matter if they can all collaborate together. Now you have some depth and accessibility, like across the world. There's tons of exchanges, as opposed to in the traditional markets, right? There's the few major ones. Is that right?
Yeah, I mean, look, as the regulations start to be rolled out, right? So I understand that the US are now looking at, the SEC are looking at it. I mean, Finxflo, we've just applied for our broker-dealer license in the US. We've also applied for our European license, which is actually a CFD, and because again, like the European regulators, they're trying to roll out something called MiCA, right, which is the European regulations, but it's going to take some time for them to be able to do that. And here in Singapore, we are regulated by the MAS. So as these regulations and these global regulations are rolled out, it means that lots of these exchanges right now, because let's be honest, some of the exchanges sometimes act in certain ways that aren't best for the purchaser of that particular asset, right? So when there's more credibility, when we actually have the regulation, that should ensure that these kind of nefarious activities stop. However, in the decentralized space, it's always going to be decentralized. It's a smart contract. You cannot regulate it because there is no company that's kind of underlying it, which is very, very interesting. So again, it's not really looking for us to for us to kind of speculate on whether decentralized exchanges are going to be successful or not. That's the will of the people, right? But we just create our infrastructure to ensure that we're able to get our clients, whoever comes through us, into the best position they can be. So we really do all of the heavy lifting. So if there's 25 different decentralized and centralized exchanges, by coming directly to us, you have access to all of those. Right? Yeah, that's it. And if you see the price, what I'm now rolling out, which is what you see is what you get, right? So if you see the price, you get that price. If you see it, you get it. That's basically it. Whereas with other kind of like exchanges or decentralized exchanges, there's all fees added on and stuff. For us, it's whatever the price you see is the price that you get. And that's it. Done.
And how do you work with all of these exchanges? Do you reach out to them? Do they reach out to you? Do you have them on radar? And then what's the process to get them integrated into the Finxflo platform?
Yeah, so the first stages were really us reaching out. So we were consistently reaching out to exchanges. I mean, the major ones, Binance, Coinbase, Kraken, FTX. You know, these kind of guys. We went after them because obviously they have the biggest pool of liquidity. And then after reaching out to them and basically negotiating deals with them, there's various deals because we put margin with each one of them. We basically get much better terms than what the average retail guy could get or the average investor can get, because we're pulling a lot of money at like as a margin pool, which means that we get like better tiering, right? So our execution's better, the pricing's better. So if you come through Finxflo, you get much better pricing than what you would if you were to go directly to that exchange. So part of that process is onboarding. So we have to go through KYC. Like we have to go through like literally they want to know everything about us, what regulations we have, what licenses we have, because obviously they need to be super careful with the people that they're onboarding. Once they've kind of onboarded us, they then give us what's classed as a UAT, which is an account of execution. So we're able to look at the APIs. So we have out their APIs coming in, whether it's REST, web, or fix, depends on who they are. And then from there we pipe them in, we place the margin, we start executing trades, and we get routed. So now we have, I think we have about 15 aggregated right now. We'll have 25 completed. No, actually it's a lot more now. It's about 22 actually. So we'll have 25 in the next 2 to 3 weeks. But what we've also done, which I feel is pretty special, is that we've developed it so that FXF is the counterparty to all trades. So if people were to sign up to us, whether it's an institution or retail client, the actual underlying LP, whether it be Kraken, Coinbase, whatever, we'll never know who that actual person is that's executing. It's us facing off to our clients, and then the clients facing off, and then Finxflo facing off to the liquidity providers. So that in itself also creates like a dark pool. So if anybody ever executes a trade through us, it's almost impossible to be front run, because nobody knows. Like if you're monitoring, you've got 25 different venues in which that trade could be routed. It could go to liquidity provider 1, it could go to liquidity provider 3. So we kind of eradicate all of these kind of front running issues that are going on as well.
And so would you say at the moment, obviously you're targeting like strictly traders? What's the type of profile of a retail or even institution to come to Finxflo to, deposit, use it? Is it mainly for trading? And do you see any other products or services that you may offer in the future, like lending or borrowing or whatnot?
Yeah, we have a lot. So we have staking right now. We've also packaged up or in the process of packaging up our data analytics arm. So you might have heard of Glassnode and these other kind of analytics, or Wow Watcher and this other stuff. So we're packaging up all of the information from our liquidity providers, all the execution data, all of the speed of latency, all that information nobody else in the world has, but we will have, which is our proprietary information information. We will then combine that with obviously the wallets and looking at the various wallets globally around the world to see the ebbs and flows and to see who's selling, who's buying, for that kind of monitoring. And all of this data is coming into our data arm, which will be packaged up and sold. We also have a proprietary trading arm as well. So we're just about to launch our own hedge fund. It's been seeded with $10 million. So we're going to be start rolling that out. That's fully quantitative and algo driven. So we have a bunch of algo guys that are really, really smart. We've had the algos running now, I believe, for around 6 months. They've been up on average 30% month on month. So that's a really, really interesting piece of which we're now hiring execution traders, quants, risk managers, etc. So that's another part of the business that we're looking to roll out. And then obviously is what you already know, which is the kind of like the prime brokerage arm, which is the execution and getting the global best price by coming through one account, one portal, and only going through one KYC essentially. And then we are also looking at building. I've just set up and opened up a Wyoming entity. As many people are now looking at Wyoming. We spoke to the one of the people that work very closely with the senator yesterday, and we're potentially going to be setting up our own custodian there as well. So we'll be a registered and regulated custodian within the state of Wyoming, offering custodial services globally. So that's also another part of ourselves to make sure that we have MPC and all these other stuff to make sure that our clients are safe and secure when transacting. Because believe me, I felt the pain of losing coins and money.
Yeah. So it's interesting, right? We're hearing a hedge fund, prime brokerage, retail, services. Is this just the evolution of finance, right? Like regardless if it's DeFi or CeFi or whatever, would you say that one, is this the evolution of finance? And then two, to what degree, with your background and I'm assuming your Rolodex, like is the institution side super excited about this? What are they waiting for? Is the market still too small? And then I'm assuming you're positioning yourself for a lot of these players at some point when they get in the game. And do you know when they'll get in the game? So I don't know if that was a long question, but it's the evolution. Yeah, it's the evolution of finance, and you're positioning yourself well. But like I said, you have a prime brokerage, you have a hedge fund, you have retail services, you have data analytics, which is all on the traditional side. So would you say from your friends and people that you know, are they excited about what's going on? Do they care? Is crypto funny money? I'm curious to understand, obviously this is a whole new game. And just like FX, you were in FX, I'm sure it's crowded. Obviously you can still make money, but times have changed. Stockbrokers have changed, right? The market's changed. They're not like in the 80s, doing their thing. And this is kind of the new toy. So what's kind of your perspective on kind of that degree of institutions coming in and being excited, not excited, or is it too early?
So one of the main reasons why I was thinking about Finxflo like 2 or 3 years ago was because I've got a lot of buddies and a lot of friends that are in the traditional world, right? That are in traditional finance, working for Goldman Sachs, the major investment banks of this world, right?
Yeah.
And I was talking to them like 2 years ago, and they were saying to me, "Hey, off record, we're kind of buying Bitcoin, we're getting involved in this," right? So it was like they were saying that they're doing one thing internally, like off record,
of course,
and then on record, their CEOs, whether it be Jamie Dimon or whoever it is, Bitcoin's a scam. We don't advise any of our clients doing any of this. And then in the background, they're buying. Of course, because they want to keep the prices low, right? Of course, they're not stupid. And then the rhetoric, which I was laughing at, right? So I pick up my Financial Times and I'm reading it, and I see, JP Morgan are now saying Bitcoin's the asset class to be in. I was like, well, isn't that a surprise, right?
Totally.
It's unbelievable. So I mean, look, there's many institutions that are buying. Many of them are in the US. Many of them are not buying like $1 or $2 million worth either, right? It's like 750 million, $1 billion worth, and they're all very smart about it as well, right? Like they're all buying OTC. So what OTC means for anyone listening is that you don't go to an exchange. So you're not going to a Coinbase or wherever to buy your Bitcoin. You are calling an OTC dealer. Essentially, an OTC dealer is someone that's holding a lot of Bitcoin or Ethereum or whatever coins that they're holding, and they will actually give you them off market. So it's off chain. So you're receiving those coins essentially without having any price impact. Right. So receiving those coins, receiving, there's no price impact, but you keep on hodling, right? You keep on hodling. And that's what's been going on now for about the last year. The sell-off was actually quite interesting, because there's lots of people in the market, saying, oh, it was manipulation, it was China, it was this, it was a sell-off. Look, to be honest, the markets have from the long, it was about 4,500, right? Long. It went up to 50, 55, 60, right? It went around there. People, of course, what people don't realize is if you're in from 4,000, right, and you're up at 50, of course you're going to cash out. You want to cash out your chips, right? Wait a little while, wait for the market to do its thing, to retrace a little bit, and then you got to buy it back up, right? Whereas everybody, like the amount of questions I was getting about, oh my God, it's melting down, it's all ending. I was like, this correction is a 50% correction, maybe a 60% correction, right? The corrections that I was in when I was in 2017, and the correction was like 90%. Like crypto's come a real long way. So so I'm sorry about a protracted answer, but yeah, that's
totally. So what I'm hearing is that they're accumulating, they're in this space. So is it still too small? Should we be worried about regulation and all that? Or do you think there's enough momentum now that, they're going to work it out, figure it out? If banks are in it, banks have enough power to say, let's work this out and not squash it. Not that you can squash Bitcoin, but you can probably do some damage, if you can't hold, buying and holding and restricting, certain aspects of crypto in general. But what I'm hearing is, it's going to be a new asset class, right?
Well, right now it is its own asset class. It is a new asset class. It will never be squashed now. It can't be. The market cap is too big. So basically, the banks were kind of like trying to bully retail guys, right? To say don't get involved. And then what happened is because the market was volatile and it kept on going up and up and up, the clients of the banks are saying, hey, Mr. Banker, like I want to get involved in crypto. What's going on? And what's happening is the pressure's got so much is eventually the banks have to say, okay, we will do it. Now they're all executing, and the family offices, and it's not only the banks, it's also various other institutions,
foundations, endowments.
Everyone's looking at buying.
Yeah.
Correct. So it's now like no other asset class in the world. So what the reason why I'm so bullish about Bitcoin is very simply this fact. We know that there's only a certain amount of Bitcoin that are available, right? The Bitcoin contract has been checked by some of the smartest minds in the world, and they have all concluded that there's only a certain amount in the world. Now, if you look at oil, right? So if you're an oil trader or you want to buy oil as an investment, if you look at art, if you look at diamonds, if you look at gold, there is nothing else that has like an end, like a finish. There's only a certain amount. Gold, you can excavate more. Diamonds, you can excavate more. Artists, there's always artists that are going to be painting more, right? There's always going to be more. But with Bitcoin, as soon as we get to the end of mining Bitcoin, where's the price going to go?
Yeah,
like that's it. There is no more available, right? So the price is in my opinion is going to be super bullish. That's what the institutions can see. That's what they want to obviously take the glory around. However, anybody moving into crypto also needs to be aware of the volatility, right? Because it is extremely volatile. It's not like other asset classes. You can literally, like I've seen people back in 2017 having a portfolio of $10 million and then it got wiped out to zero.
Yeah.
Right.
Yeah.
Like it can. So you have to be super, super careful, very prudent in your approach. And mainly, like anything, just don't be too greedy, right? Like when I'm trading, if I'm setting out, and if I say, okay, where's my take profit going to be, right? So is it going to be here? Am I happy with that amount of money? And when it gets there, don't get greedy. Don't say, oh, actually, I'll leave it a little bit, because with crypto, we never know what's going to happen, right? You never know.
Totally. I know when it went sub 50, that's when I went in. I thought I was going to go 45. It's funny because my dad asked me, like, how low can this go? I was like, probably like 25. This could like easily cut 50, 60, 65%. I was like, I don't know if it is. I thought I was going to hover around 45. Sure enough, right? All the way down to 33, got pretty close. So it's interesting, but yeah, I'm super bullish. I'm actually moving over a lot of money into it, just long term, right? Like by the dips, the correction, the retracements, whatever. And yeah, you got to be very prudent. You got to do your research, and like especially in crypto, this thing goes, like you said, 90%, low. The swings and the volatility are gut wrenching. You just gotta think long term and diversify, as they say. Cool. So a couple other things, and we'll kind of conclude here. But I did want to touch on two things. The first one is, you guys have a token.
Yes, FXF.
And how is that incorporated into the platform? How do you use it, and what's the purpose of the token?
Right. So the token is a utility token, right? So right now it's in order to reduce trading fees, right? So the cost of execution will decrease drastically by using FXF. We're also working on a lot of other use cases, right, for the token, to ensure that obviously the utility is added. But right now, the key core primary purpose of holding FXF is to pay trading fees in order to be able to reduce them and get better execution, basically.
Nice. Thank you for that. Last question. How you guys are leveraging Ethereum and Tron? The topic of this kind of conference is around, different blockchains, the pros and cons. Hold on one second. Sorry about that. So game of chains, the pros and cons of blockchains, technologies. What was your decision in the Ethereum and kind of Tron, vision, and then kind of bridging that together? A lot of people maybe underestimate, but there's a lot of blockchain technologies and networks and stuff, and they all do something different. Some do the same, some are compatible. So everybody has their preference. What's kind of your decision making on the Ethereum and Tron side?
So we've just literally we have an ERC20, which is obviously Ethereum. We've just listed and created a bridge to PancakeSwap, so Binance Smart Chain, and we're now integrating with Tron. The reason why we're creating the bridges for multi-chain is two aspects. Number one, Ethereum and gas fees are just ridiculous sometimes, right? So it's just like to buy $100 worth of tokens of FXF, you have to spend $100 in gas. I mean, that for me is absolute. I don't want people that want to take part in our project and buy our token and hold it long term to be paying $100 in fees. It's ridiculous. So we then automatically we're looking at other blockchains in order to reduce the fees for our people that want to take part in us. Like it's our duty to try to get the best price for people wanting to buy FXF, right? And then a secondary reason is that we can offer crosses and pairs that nobody else can in the world, right? Because we're a brokerage, we're not an exchange. Because we have one portal, one account, we can have all the coins that are listed on Binance. We can have all the coins that are listed on FTX. We can have all the coins that are listed on Uniswap. We can have all the coins listed on FTX or whoever else it is, right? So we have all of those coins that maybe because certain coins certain tokens only list on certain exchanges, right? Because they go and say, oh, I'm going to have a centralized exchange listing. So they go to Coinbase, for instance. So by us, we aggregate all the coins into one account. And then what we also do is that we can offer Tron pairs against Ethereum pairs, and we can offer them against BSC pairs. So you can do cross-chain pairs trading, which you're unable to do, I think, pretty much. There's only a few other places to be able to do that, which are normally protocols, but there's no centralized place in order to have a consolidation of every token, every coin, and have cross-chain pairs as well. So that's something that again, I'm trying to build something that's more accessible to more people and give more options. So you could have a Tron pair against an Ethereum-based pair, and you put them together. So that's the whole point of us building that more opportunity for retail and institutional investors to take advantage of.
Yeah, some accessibility and interoperability amongst that. Are you looking at maybe not in the near future, but do you look at other blockchains right now that are kind of cool or that are on the radar?
Yeah, so I really like Solana, to be honest with you.
Everybody's been saying that, yeah.
And Solana, Matic.
Yeah.
Matic's one that I've been looking. I'm like, oh, yeah, it's Matic's pretty hot right now. I was actually a big advocate of DOT as well.
Yeah.
It's kind of cooled off a little bit low. There hasn't been much really going on, so I'm not too sure what's really happening. But I'd really say Solana and Matic are the two ones that are on the radar.
Yeah, we've had Solana, participate in this. I interviewed Anatoly last month, and then Matic is one of our partners, and they've been around a long time actually. Matic, and they stuck to their guns, and they're kind of making it out on the other end after a period of time. And that's a good solid team. So no, that's interesting, and we've kind of gone over time here, but James, it's been a great discussion. So some of the things we've talked about was DeFi's biggest obstacles, how Finxflo is tackling some of those hurdles and challenges and providing, services to not only retail, but institutional. And you guys are positioning yourselves, for the long term here, coming from the traditional side of finance. It seems like you're setting yourself up for success, hopefully. So I wish you the best. Last question. Do you think you're going to turn into a bank or what?
To be honest, the old way of thinking how banking is, no, I never want to be a traditional bank. I'm being a crypto bank, like being like forward thinking and being fair to customers. That would be something that would be pretty cool, right? Building and developing a full bank that isn't like working just for the bank and making money, but it's actually helping individuals, right? So being a socially aware and socially conscious bank would be very, very interesting. But the traditional world bank, no, I don't want that.
No, that's interesting. You point that out, and I think that's critical and very important, because I think the reason why I asked that is because you start providing services, and you start here, start there. Before you know it, you pretty much have assets, you have users, and that's good. I mean, I think people gravitate to that. They do want a one-stop shop. They don't want to deal with multiple accounts and interfaces and dealing with noise and stuff like that. So that's why I asked that. But I think, in the crypto bank, fundamentally is way different than what we're all used to from the legacy side of traditional banking. And so that's good to hear, that you have thought about it, but that it is going to be completely different moving forward for everybody.
Correct.
So cool, man. I think that's it. Where can people learn more about Finxflo, updates, insights, if they want more information?
So we have a bunch of different ways of keeping up. Twitter's one of them, obviously. Telegram, we have a very active Telegram group of about 20,000. Make sure you go to the official channel though, because there are a lot of spammers of fake accounts out there, right?
Yeah.
Yeah, and yeah, I would say that they are the two main options. We obviously have Facebook and Instagram, but they're not really used. It's mainly the Twitter and some Telegram are the best ways. And then our website is www.finxflo. So it's FINXFLO without the W. So just FLO at the end.com.
Awesome. Well, it's been a real pleasure, man. We've chatted for almost an hour, and I hope to either have you back or somebody else on the team to get some updates in the next few months, and continue the discussion as this thing evolves and the pace of innovation picks up. Right, all the time. The market's always moving. Technology is always evolving. So we'd love to have you back there. Everybody, thank you for tuning in to Reimagine 2021. This is James Gillingham, co-founder and CEO of Finxflo. It was a real pleasure, and we hope to have you back, and we'll see you again.
Cheers. Thank you so much, Adam. Really appreciate it. Take care.
Awesome.